Hello guys, welcome back to the Lumley trading video. In this one we are going to be doing some in-depth stock analysis and technical analysis over on Tesla, ticker TSLA. So obviously this week we can see it has been in quite a strong uptrend and really has been for kind of the last month or so. So obviously here this is a longer term time frame. On the left we have a 6 month, on the right we have the 1 year. And really we kind of got this bottom around early Jan. Since then just really a strong uptrend. I mean we're up, you know, about 60 or so percent from, or sorry, 90% or so from that low, nearly doubled in price within kind of just the last month or so. So really, what are we looking at going forward? So obviously, when you see kind of big moves like this is when I would be a bit more hesitant. Locking in profits from a trading perspective, obviously, if you're investing, then you probably want to be holding for over a year. And if you're buying at these kind of lows, you definitely probably haven't been holding for a year. But from a trading perspective, there hasn't really been any strong pullbacks, which is quite concerning because obviously momentum can't stay forever. So considering it's up nearly 100%, and that's probably what I'd be watching for in kind of a key focus is when is it up 100%. So that would be very close to kind of a $200. So $200 key psychological level, basically up to 100%. 100%. From its low, so that I could definitely be seeing that as kind of a key profit taking level. And obviously you can see as well here it's definitely kind of like a key level, that key support, key resistance. There's really a pivot level in general. So this is really where, if I was holding it long from a trading perspective, I would really want to be locking in profits, because more likely than not we're going to get a pullback. Then we can see obviously if we break through here at 212 and 225, these are our first deviation on both the 6 month and the 1 year. So really now we didn't have much resistance in before this. We had kind of one key level that I would have been paying attention to around 165, and we can see we broke through that. We came back to test it as a support, it held, and now we're breaking out. So really this is where I can see it slowing down quite heavily, and 203 or kind of $200 because the key psychological level, it's going to be kind of that first step of resistance. So that's really what I'd be paying attention to, locking in profits into here. And really I may even flip short buys. I might see if I can find some cheapish options, which are maybe a bit undervalued, and if so, just when we push up a bit higher, just hitting those short, because I would say probably a 9% chance we'd get a relatively good pullback coming into this level. Now that if we do break out of that whole zone and did continue higher, we would have further out resistances at 267 and 287, with final levels taking us out to around 325 and 350. Obviously probably not going to happen in the short term, so there are things to keep an eye on if we did continue to break out, but really the key focus to the upside is 203 or 200 to about 225 as of right now. From a support side, what am I paying attention to? 163 to around 156 statistical mean. So this would be my target if I'm holding short into this level. That would be my overall target. Not looking to open up any new positions in this range, because again, fair value, this is basically what statistical mean means, is to me there is no trading edge. If it's at a fair value, you're not buying at a cheap place, you're kind of shorting at an expensive price, you're just kind of getting in for the sake of being in. So to me there is no opportunity there, and instead I would have to wait for a further breakdown. $100 would be that level, because not only is it a key psychological level, 52-week low, it's also our first deviation on both the 6 month and the 1 year. Really high probability chance of bouncing here, and that's why on the investment account I bought down at this kind of low, because not only is it a key psychological level, but I believe also the deviations were there when we were down at that kind of level. And if we did have an extreme breakthrough, then we would have supports at kind of $50 and below. But again, is that going to happen anytime soon? Most likely not. I mean, it would require about 75% sell-off from where we are now. So really, this is a key focus. What I would be expecting is a bit more of a continuation on Tesla to around $200. And really from here, I would be looking at the volume. I think it would shift to a lot more kind of a selling pressure, and just something I'm looking at more short bias again. Probably trading it through options, whether that's I buy an outright put. If I can find cheap ones, I will. If I can't, what I'll be doing is probably just trading it as either a debit or credit spread, and just looking to profit as the kind of price declines, and then just probably locking it in. Probably don't hold it to expiry, because it's not saying we won't break out of this level, but it's just saying we definitely expect a pullback coming into this level. So anyway, I hope you enjoyed the breakdown on Tesla. If you did, why not drop a like and subscribe and check out this analysis video.